Hey everybody, this is Jim at SP500chart.com. It is Memorial Day, May 26, 2014. We're a little bit after noon here on the East Coast, and I appreciate your patience. I just had a lot of family stuff going on, and I've got it going on today and tomorrow, etc., etc. Just want to give you a heads up. Tomorrow's video is going to be late. It could possibly be Wednesday morning. We've got family in for this week, and I am gone from about 3 o'clock in the afternoon till who knows when, doing some work for a client of mine. So before we get started, I just always need to remind you that the website and this video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, we closed the week up a fair amount, but I'll remind you that we ended the previous week down by a bit, and in rather swift fashion. You know, we were up here kind of getting momentarily over 1900 back on the 13th, went sideways, broke through a little kind of, I guess you could call that maybe a little topping pattern here, broke through that pretty swiftly, and so that kind of gave this week a fairly low starting point, if you will. We came into the week with the possibility that we could be forming a bear flag right here between these two lines. And as it turns out, we did not. Instead, we came up to the upside, came back and sort of back tested these levels and then started taking back off again. Now, you know, the past 13 weeks has been really tough to get a handle on what's going on in the markets. I think we've done okay with some of our little descending resistance lines that when they get broken out, that usually means we're headed higher. We did this week break out over one of those descending resistance lines right here. We broke out early on Wednesday, back tested it, and since that back test at about 1880, the markets have been up a little bit more than 1%. No big deal. The line that is important, and just by way of the weekly review, we knew coming into this week that we had broken a resistance line, a support line, and we also knew that we should generally expect that this line would serve as resistance going forward. What makes it interesting is the fact is that if you look at what happened on Friday, we got up to this line and then just hugged it, trading upward slightly, moment by moment, hour by hour, throughout almost the entire day. Now, Friday was a low volume day because probably a lot of people taking off for the long weekend. Let's see what happens when we get back on Tuesday, because we are getting very near what I would call a revised trigger line, if that makes sense to you. Basically, we had been looking at 1884, 1885 as our line that would signal that we're going to get much higher. But even when even when that was our trigger line, so to speak, you know, I was mentioning all along, I think we need a close that is technically significantly above 1900 before we can expect much in the way of a leg up. And here we are, a record close, but just a hair width above 1900. And what makes this look even, to my eye, even a bit more precarious is the fact that we're hugging this line right here. And how long can you do that before you before you encounter some resistance? And here is a line right here that is currently, when we open tomorrow's trading day, that line will be at right about 1903. So guys, I would watch that level. And really, I think that's the moral of the story for now. Watch 1903. I'm not abandoning the 1900 or the close over 1900. And I always want to add a close over 1900 that looks more significant than getting over it by 0.57. But this line, 1903, I think that's going to be the one to watch. See if the S&P has the strength to get over this line, because if we do, and if we could get back above this broken line that should now be serving as a resistance, but there's always the outside chance that we end up being in something of a broader channel, and that this rising wedge shape right here isn't the full story. I'm open to that possibility. If that is the case, there's one of two ways. We either break out over this line and start heading up, or we could find resistance at this line again, come back down for another dip, and then hopefully take this out again. But we are essentially where we have been, as you know, for 13 weeks. We are over 1900, but not by enough to get excited about. Certainly not enough to say that we have... as a matter of fact, our intraday high was not as high as our intraday high back on May 13th. So let's just keep our fingers crossed, see what the markets can serve up for us. I would love to see us eventually learning that this line ends up being something more like this. That would be great. I can't make that call quite yet, so I'm going to leave this where it is, because so far you can see that the way the S&P has been reacting around this line has been pretty typical behavior. So guys, keep your fingers crossed for when we open the markets tomorrow on May 27th, 2014. I would watch 1903 as resistance. If we can break out above that resistance, then I think we are likely looking at all of this noodling around that we've been doing here as a big setup, a large continuation pattern that should take us, if we read the depth of this properly, could take us very near 2000. Okay, I know that flies in the face of those who would say sell in May and go away. But you know, that doesn't always work. So I'm content to just keep watching the chart. If we do break down during the week and we can't get over 1900, then I would look to this line right here to provide support, or this rising line right here to give support. So guys, let's just hang with it. We're not out of the woods yet, but I think it was pretty good to see us at least mount another attack over 1900, and it's always good to get a new all-time high in on the close, but I'm going to not feel particularly good about this situation until we are up significantly over 1900 on a close, and hopefully somewhere in the 19 teens. I think if we can get up to that level, then we start to say this is a legitimate move here and not just some little flirting with the 1900 level. And so that, I think that's about it, guys. Again, looking at a very short-term chart here on a 3-minute, you can see how we just slid sideways for a bit. What we need to break this line is a significantly powerful move that just gets up here and says, hey, to heck with this resistance at 1903. To heck with it, we're going up. So far, obviously, we're not even up to 1903, and the way we're getting up there, to my eyes, just looks a little bit suspect. So, guys, thanks for watching. I hope you had a great, or are having a great Memorial Day weekend. And take care. Thanks for your support. And let's just keep our fingers crossed. Will this 13-week stretch of being stuck between the mid-1800s and 1900, could it be coming to an end? I certainly hope so. Thanks for watching.